AM Best has just published its market segment outlook for the United Kingdom's non-life insurance segment. Joining me from the London office is one of its authors, Dale Kirby, Senior Financial Analyst. And Dale, AM Best has maintained its stable outlook on the UK's non-life insurance segment. Can you summarize some of the factors that supported the outlook?
Sure. So moving into 2026, the industry is facing a range of headwinds and tailwinds, which on the whole, we view to be broadly balanced. So perhaps the first headwind is the geopolitical uncertainty that has increased throughout the first quarter of 2026, where we observe high levels of economic uncertainty, supply chain disruptions, and potential concerns surrounding inflationary pressures. On the other hand, insurers continue to benefit from a fairly favorable yield environment, which we expect to continue benefiting investment income throughout 2026, which ultimately will give insurers a bit more headroom in terms of their ability to absorb potential erosion of underwriting margins.
The report mentions that pricing pressures in commercial lines could persist into 2026. What does AM Best believe that insurers need to do in order to manage this?
Yeah, so as you correctly observe, there are downward pressures on rates moving into 2026, while at the same time we continue to observe elevated cost pressures, which presents insurers with an interesting challenge. So what we have observed for some companies is tightening of underwriting discipline, whereby companies are focusing more on preserving bottom line profitability instead of top line growth. At the same time, we expect the industry to continue its use of intelligence data and improve or refocus efforts on better risk segmentation, which will help better identify good and bad risks, and therefore translate to improved or more selective underwriting, pricing, and setting of rates. Finally, we have kind of observed an emergence of the use of AI and automation tools over recent years, and we expect this trend to continue. More so in terms of sort of driving operational efficiencies and managing down the expense base.
The overall profitability of UK insurers has benefited considerably from the elevated interest rate environment of the last few years. How might this continue to benefit insurers in 2026?
Sure. So fixed income portfolios, for context, tend to comprise the bulk of invested assets across the insurance industry in the UK. And that has really propped up investment income over the last couple of years. So looking ahead, we believe that the geopolitical uncertainty is likely to add further fuel to the higher for longer interest rate environment. Now, providing there's no sudden interest rate shock like we witnessed in 2022, we expect the industry to continue leveraging these current conditions, rolling what tends to be relatively short duration fixed income investments, rolling those over into relatively attractive reinvestment yields.
That was Dale Kirby, Senior Financial Analyst at AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.